Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on SURG Copper. SURG Copper is traded on the TSX.V under the ticker SURG and on the OTCQX under the ticker SRGXF. And I'm joined today with the CEO and director of SURG Copper, Leif Nilsson. And Leif, it's great to get you back on the show. It's been a while, man. It's been since the end of last year since we've had an update on SURG. So we were talking in the last couple of weeks. I knew you had some important news that you're going to be putting out, and that really deals with the metallurgical recoveries. We will get to that. But for people listening in that haven't kept up with the project, the Berg Project is in British Columbia. It's a copper, molybdenum, silver, gold project. So it's a porphyry project. It's got all those metals in there. It's got pretty solid copper grades, higher than average molybdenum grades, and then a nice silver kicker and a little bit of gold. So it's a great project. You've been working hard on it for a long time, but you put out a PEA on the project back in June of 2023. And since then, over the last 2 years, you've done a lot of different work to de-risk the project, to advance it further with the goal of putting out a PFS down the road here at the end of this year, beginning of next year. Let's get into that work. Let's dig into a couple of these components, Leaf. And so one of the things you did is a lot of infill drilling, and that was to convert categories. Why don't you remind people of the resource size of the Berg project and the infill drilling you've done over the last couple of years?
For sure. First of all, thanks for having me on the show again. It's great to catch up. I think that was very helpful framing. So I'll kind of take folks through it. So as you mentioned, June 2023 maiden preliminary economic assessment for the Berg project. That came with a fairly important resource update as well. That resource had about 1 billion tons in the measured and indicated categories and around an additional 540 odd million tons in the inferred category. And again, that's the total resource. The portion that falls within the PEA engineered pit, so that's sort of the mine plan that was associated with that study, was sort of 978 million tons roughly, of which about 80% of that was measured and indicated. So a bunch of numbers there, but the key takeaway was the mine plan for the PEA was fairly, I think, mature in terms of the degree to which the resources, the proportion that was in M&I. But as you move a project like this forward towards PFS, which is where you declare reserves for the first time, an important part of that is that you can't use inferred resources for a pre-feasibility study and beyond. So one of the tasks for companies like us that are advancing projects like this is to upgrade those remaining inferred resources just in the normal course as you advance. So chronologically, after we released that PEA in 2023, we had a field season that year where we did some really interesting deep drill holes at Berg. And there was sort of multiple purposes for those holes. Some of it was converting inferred resources to measured and indicated within that expected kind of PEA pit shell. But we were also, doing some proper exploration down in the, really deep portions of the deposit. So several holes in 2023 for that. And then our field season last year was quite a bit bigger in scale. There was some infill drilling into the resource and some just proper exploration drilling, testing some targets in the near resource area. And some, really good results came from that. So I think there was a couple press releases that we put out earlier this year or late last year that highlighted some of those results. But, one of the better ones that I think gives you a good flavor for what we often see at Berg was hole BRG 24-255, which had a total interval of around 320 meters, grading around 0.29% copper, 480 ppm moly, 4.26 grams per ton silver, and 0.025 grams per ton gold. So that's kind of a typical, long interval of mineralization at Berg. And then often we see in the supergene enrichment zone, which is typically in the first 100 meters or so of the deposit, some significant copper enrichment. And this was a good example of that, where in that sort of top 100-meter area, we hit 88 meters of 0.57% copper, plus 930 ppm moly, plus 5.3 grams per ton silver, plus 0.04 grams per ton gold. So that sort of high grade interval in the top 100 meters of that hole is a great demonstration of what Berg can often deliver. I think it's often viewed by people as being a low-grade deposit, and look, a lot of stuff in British Columbia is on average in general, but our grades here are very competitive in that landscape, and I think that sort of superficial enrichment we see is something that is very notable. And as you mentioned at the top, the moly grades here, they're actually quite exceptional by global standards. Berg is a bit of a unique beast in that regard. The ratio of molybdenum to copper grades here are a bit of an outlier on a global basis, and some of the met that we'll talk about in a moment, I think, points to the importance of that.
Well, let's maybe get into that next, just because I think when you look at the different metals involved here, the moly is higher grade than people are used to, and I don't think most retail investors have a good way of gauging that. So maybe you can put a little more color around it. You kind of just alluded to it there, but also you have a nice silver kicker here too. There is some gold that contributes, but when you add the silver, the gold, and the moly together, they really are substantial co-credits along with the copper. So speak to how, from a development standpoint, maybe some comparables in other mines that would have similar copper grades, but then when you figure in the co-credits and factor those in, how that adds up to a good project, but also a little bit tricky to separate it. And you've done some metallurgical work here that you just released to the market where you not only showed great copper and moly recoveries, but also great separation and the two different concentrates. So maybe let's dig into the metals and the metallurgical work you've done.
Yeah, for sure. So, look, I want to emphasize that this is a primary copper project. The economics will live or die based on the copper portion of it, and the PEA, the way we disclose some of the numbers there, I think made that very clear. Based on the long-term metal price assumptions used in that study, I think it was something around 64% life of mine revenue contribution came from the copper. And we provided some pretty good sensitivity tables as well that showed that, if you have no familiarity with molybdenum and you don't have a view on long-term price assumptions, at the very low end of those sensitivity tables we put, it sort of shows that the economics are still very robust, even at very punitive molybdenum price assumptions. That being said, our molybdenum price assumptions were, in fact, quite conservative. We used $15 per pound moly, and depending on what benchmark price you're looking at, whether it's sort of domestic North American or international, the molybdenum price has been very strong over the last few years, sort of averaging between $20 per pound and $30 per pound, with some spikes even above that. So I think a lot of the studies we've seen put out recently have very consistently used around $20 per pound moly. So yeah, this project, if you look at those PEA numbers with kind of more updated prices, of course the headline economic numbers will be higher than the base case that we highlighted, but I think you'd still see revenue contribution from copper as a majority of the revenue and the value drivers, but there's very considerable value contribution from both the moly as well as from the mostly silver as opposed to gold, but the precious metals combined. Obviously, the prices of those things have been very strong in recent years as well. So that's kind of I think the dollar value economic framing. I think there's an interesting strategic lens as well. Most people are familiar with copper and its role in our economy and the world, and what the sort of investment narrative is around that. I think molybdenum is just less familiar to folks for obvious reasons. It's kind of a hard word to pronounce, and I think the end markets for that metal are just they're more kind of buried in the intricacies of heavy industry. But the outlook for the metal is actually really strong. It's really interesting. It's basically very high performance steel applications, of which there are already myriad and increasing quite a lot. And on the supply side, a lot of this stuff comes from byproduct production from this type of copper mine. And as people will be familiar, a lot of the up and coming copper development names out there a lot of them are copper gold, and so they're completely devoid of a moly credit. And so I think the outlook for supply of this critical mineral, critical metal, when you look 10 years out, 10, 20 years out, it's increasingly uncertain, because a lot of the traditional projects that would be important in the pipeline for supply of this metal are really missing that metal credit. They're kind of a different classification or different style of porphyry copper resource. So from that perspective, we see Berg as really emerging as a uniquely positioned a copper project out there because of the relative sort of flavors or weightings of the byproduct credits. And yeah, when you get into the debate and dialogue around critical minerals and what that all means and what it's about, from a Canadian lens, this is an important project. Canada only produces molybdenum today from two mines, the Highland Valley mine that Teck operates and the Gibraltar mine that Taseko operates. And they're both at a run rate roughly of 1 to 2 million pounds per year of moly. Berg, if it was in production today, would be, I think the life of mine average from our PEA was around 13 million pounds per year. So it's a 10x size differential between the current incumbent producers and what Berg would be. So this is classified as a critical mineral in Canada. It's got end use applications in a wide range of very strategically important industries, not just domestically in Canada, but just kind of globally or in the West. And that ranges from aerospace, defense, various energy applications, whether you're talking about deep sea oil drilling or natural gas pipelines and various other things like that. It finds its way into silicon chip fabs and so forth. So lots of really important, high growth, strategically important end use industries, and a lot of uncertainty around what the future supply of this stuff looks like. And again, we don't want to, we're not a moly project. We hang our hat on the economics for copper. And that brings up another point, which is that there are some primary moly projects out there in the world, and they have historically had a tough go of things because they don't benefit from the sort of earnings or cash flow smoothing effects of being a byproduct from a copper mine. So a lot of these, primary moly mines, some of them have shut down and sort of been on care and maintenance for a long time, really partly as a result of the volatility of that metal price and the fact that most of their competitors would be projects like Berg that are primary copper. They run or don't run based on what's going on the copper side of things. And so as a result, I think Berg is, you can think of it as a very resilient, large scale supply of molybdenum in the North American context with a really attractive copper business serving as the foundation.
Well, let's dig into some of the work you did on separating these valuable metals into different concentrates, but also looking at the BulkCon results. On the 17th of June, just this week, you put out the news that shows 90.7% copper recoveries, 93% molybdenum recoveries, the bulk concentrate grading 29.7% copper. So those are excellent recoveries. And then you went on to further do some separation work. Walk people through on the call that are listening, Leif, the importance of this metallurgical work, what it means for the upcoming PFS work, and what it means for the development potential of the project.
Yeah, I'll keep it simple because it's this stuff can get very technical. So when we acquired the Berg Project several years ago, there was a corpus of some met work done, a decade or so prior. We saw a lot of opportunities to improve that. We opted to table a PEA with some conservative assumptions on met with the intention of improving that sort of piece of the puzzle in the aftermath. And the news that we put out this week is the result of that quite considerable effort. And so at a very high level in the PEA, copper recoveries of around 80%, molybdenum recoveries of around 70%. We ran this kind of year-long $1 million met program with a lot of professionals involved, not just from the SURG side of things, but the folks at the ALS at the laboratories, our engineering consultants at Ausenco, as well as input from our strategic investor arm as well. So lots of sort of brain trust on the case. And the key results, folks can look through the press release to get the details on everything, but it certainly points to the prospect of materially higher recovery assumptions for those key metals in the future PFS when we get to that study down the road here. And what I mean by that is, potentially 5 to 10 plus percentage point increases in those recovery assumptions in the study.
Yeah, so they're going to look a lot better than they did in the PEA after all the work your team and other teams have done on the metallurgical work. And then you also have done a lot of geotechnical drilling over the last 2 years. Now, this is something that doesn't maybe get the retail market excited, Leif, but maybe just explain briefly why it's important and how that also sets you up for success for understand everything from like how waste will be treated, where you'll be building things on the property, water testing, environmental, how that all ties into the geotechnical drilling that you've been doing.
Yeah, exactly right. So about half of the meterage we did in the 2024 program was effectively geotech holes. They're all kind of collared within the resource, so you get a lot of value from the geological and kind of assay information from those holes as well. But yeah, the orientation of them is kind of pointing outwards, and you essentially want to be intersecting the final pit walls. And then there's a bunch of specialized tests you do to gain information on rock mechanics, hydrogeology, things like that. And that information is ultimately used to understand, yeah, some of the kind of physical parameters of the rock and its behavior as you're advancing a mine. So at a high level, it impacts things like final pit slopes, but also more subtly, it impacts the ability to optimize the way the mine is developed over the course of its life. So ore deposits are never completely homogeneous in terms of grade distribution. You have little pockets of good grade that you, from a financial returns perspective, you want to mine as early as possible. And there's physical limitations on how you do that, not just where it exists in the pit, but also how the pit can be developed in terms of rock mechanics. So this sort of geotechnical work, it is super important in terms of optimizing the mine plan and ultimately the cash flow sequence that you see from a mine. So again, keeping it simple, the upshot of the results that we released about a month ago on that, again, pointed to a degree of conservatism in how we approached the PEA. So the future PFS mine engineering, mine planning is yet to be finalized. So I can't sort of point to any specific results there, but we showed in this recent press release that the data, the information that we gathered from this geotechnical program will likely support, on average, steeper pit slopes than what was assumed or what was modeled in the PEA. So again, that will ultimately support potentially more efficient, more cash flow advantageous development of the mine over its 30 years. And at the very end, you could have final pit slopes that are ultimately a bit steeper, which can, help drive things a bit deeper, convert some material that was, under the previous pit into being captured in it. So yeah, lots of kind of knock-on advantages to that. But I think the combined takeaway of sort of both of these things, the geotech program, the infill drilling we spoke about, and the MET, is, we've been on a steady march over the last couple of years from putting out this maiden PEA. Subsequent to that, we brought on ARM as a strategic investor, and they've been fantastic partners. And we've had a couple field seasons of really advancing the project technically, de-risking it. We acquired some important ground last December that is situated around the infrastructure layout area for the project. And yeah, we're sort of steadily moving towards PFS. And I think folks can look at the kind of high level takeaways from each of these things and see that a lot of the numbers in the PEA had a degree of conservatism to them, and B, just the way the chips have fallen, both in terms of the outcome of these work programs, but also just the broader market, both in metal prices as well as, I think, kind of the permitting environment in BC. Lots of stuff is sort of materially improving around this stuff. So we're very happy to see the direction that things are going at Berg.
Well, and you brought up the permitting there. Could you just briefly touch on that? Because we get questions on every development project of what are the next steps for permitting. Give us a quick update on where you're at, what you've got, and what you still need.
Yeah, I mean, we have not entered the environmental assessment process for Berg. That's sort of typically something that comes after the PFS stage. Believe me, there's a lot of work going on to sort of prepare for that, both on the technical side as well as the business and social relationship side. So we are gearing up for that phase. And in the BC/Canadian context, that's what it means when you're talking about permitting a mine, is that the big hurdle is environmental assessment, which sort of bakes into it a lot of the consultation, kind of First Nations and just social engagement side of things. And on the back of environmental assessment approval, that's when the more specific operating permits are applied for. But the main hurdle is always environmental assessment. So we're not in that process yet. But what I was alluding to is post the Canadian election, the BC provincial election last year, and importantly, the evolving dynamics with our neighbor to the south, there's been a real kind of attitude and sea change in Canada. It's a very dynamic thing. It's hard to sort of pinpoint where it is on a day-to-day basis, but there's a lot of sort of federal bills as well as provincial bills across a number of provinces in Canada that are, and a high degree of rhetoric going on that is really all, I think, geared towards trying to improve Canada's reputation and sort of observed timelines around permitting these sorts of big, important, strategically significant projects, particularly when there's a critical minerals angle or lens to them as well. So timelines for these things, putting aside whatever the statutory timeline is, the historical track record has been pretty long for some of these things. And I think just kind of taking the rhetorical language from many politicians today and policymakers and people working in government, I think there's a real effort to try to get these things down to kind of 2 to 3 years and try to get the right legal and policy framework in place to achieve that. So again, it's pretty dynamic. This is all happening right now, but I think there's a direction of travel happening in Canada that could see the assumed timelines to permit something like this or projects like this dramatically accelerated.
Well, and to that point, the government also has some funding available, and they're treating these critical minerals finally with the spotlight that they deserve as far as not just being critical and strategic, but they want to be sourced domestically. So are there options that you have to explore because of the moly and the copper where you could get some of that government funding applied in addition to the partnership you have with African Rainbow Minerals as a strategic shareholder? Maybe also unpack that too, that you have that relationship, but could you get some government money, Leif? That's what I'm asking.
Yeah, absolutely. I mean, we've got applications in the works for stuff like that, so it can't be too specific. But yeah, the government of Canada has to their credit, a number of funding programs, I think broadly under the umbrella of NRCan, Natural Resources Canada. So sort of earmarked pools of capital for critical minerals projects at various stages of development. So you can apply for funds for things at the study stage, or there's a lot of awards and disbursements that are already being made to kind of construction ready projects. I think a lot of it doesn't necessarily go into, hey, the CapEx or the development funding for a project. A lot of it is like shared infrastructure, ancillary infrastructure type stuff. But that stuff is super important. It is a big part of what unlocks these things, especially when they're in a remote part of the country. So yeah, to the credit of the folks in government behind that stuff, I think they are doing a good job there, and there's a lot of money being put forward to support these things. So yeah, we haven't really made any kind of big announcements yet around being awarded any stuff like that, but we're definitely making application.
Well, maybe take a quick moment and just unpack the strategic shareholder you have with African Rainbow Minerals. ARM, just another strategic stakeholder bringing in financing, and they just recently topped up in the recent financing you did.
Yeah. For those who don't know who they are, they're a South African-based diversified mining company, so listed on the Johannesburg Stock Exchange, headquartered in Johannesburg. Production exposure or production interests in a variety of commodities ranging from iron ore and manganese to coal, PGMs, nickel, so kind of across the map. Rich history in that part of the world, and I think starting to look at stuff elsewhere. And so there was a longer timeline and history to their involvement with us or their investment in us. But yeah, we announced that initial investment transaction a little more than a year ago. They sit on a technical committee that we have, and yeah, they're fantastic partners. So again, they're a diversified mining company that builds and operates large scale mines, stuff that has, thousands of employees and millions of tons of material movement. So they bring a lot of significant technical expertise and operating credibility to what we're doing. And yeah, I think have a unique kind of strategic interest in what we're doing at SURG.
Well, and just a quick comment, Leif, on maybe where the Berg project fits in the overall scheme of Canadian copper projects or, polymetallic deposits, just to give people a sense of how it stacks up. If you're going to get government money or if you have ARM in here as a strategic investor, what do they see in the Berg project and how does it stack up in the country as far as these critical mineral projects?
Yeah, great question. I mean, I often talk about, there's kind of big copper and small copper. And what I mean by that is big copper is kind of typically just porphyry copper projects. Like these are the deposits that are on a global basis, they are on the lower grade end of the spectrum, but huge tonnage, high material throughput, and usually like kind of big production volumes. And if you look at global production, copper production as a whole, I think something like 2/3 of global copper production today comes from these styles of deposit. And in a Canadian context, we have the Western Canadian Cordillera, so predominantly BC, but a little bit into Yukon as well, has a bunch of these known porphyry districts. And you compare that to Eastern Canada, where, you've got byproduct copper production coming out of the Sudbury Basin, or, some other different styles of deposit, whether it's sort of, smaller but higher grade vein hosted systems, or some interesting, ancient styles of much older quasi porphyry type deposits. But I think for, big copper in a Canadian context, you're sort of in the realm of Western Canada. This is sort of where the big porphyry deposits are, the active mines that are kind of pushing towards that, 100,000 tons per annum of copper equivalent production or higher. And I think the development lens there, the development pipeline is pretty simple. There's a handful of projects that are in the Golden Triangle, for example, that are great deposits, perhaps a bit remote and maybe challenged from that perspective, like big hurdle to overcome how distant they are from things like roads and power lines and things like that. We'll see how those develop over time. And then in the, elsewhere in the kind of landscape of junior companies pushing forward projects like ours, it's not a huge list. There's maybe half a dozen companies with projects like ours. And I would say, we are one of the more advanced ones, particularly in BC, in terms of, heading towards a PFS with a project of this scale, with this sort of economic return profile and the kind of metal exposures that we have. I would say we are one of the largest and most advanced in BC. There's a couple other ones that are, at the PEA stage or pre-resource even, sort of. There's been some high profile ones that have secured interesting strategic investments in the last year or so, but they're all kind of pre-resource. They're very, earlier stage in that sense. So yeah, I think in both a BC as well as a Canadian context, folks should be aware that the Berg project as a whole it's already quite big. It's quite, mature in terms of how advanced the resources, and we are pushing on it quite aggressively to get it down that development path in terms of, technical engineering studies and preparing it for the ultimate permitting path.
Well, and Leif, just as we wrap up, maybe just give people the roadmap towards the PFS. When do you think that you'll see it out to the marketplace? What steps need to happen before you can complete the PFS? And do you have the budget to complete it? So just maybe as you wrap up, what are the key catalysts and milestones coming up building towards that big event?
Yeah, I mean, the news today was a big one. So, happy to have a successful culmination of that big effort. But we will have a field program this summer. We're excited to be gearing up for that. And there's going to be some important aspects of that we want to see de-risked a little bit before we make sort of official promises around, timing and guidance on the PFS. So we're well positioned on the PFS and are kind of moving towards a timeline of late this year, maybe early next year, and we're parallel pathing a bunch of attributes to that. So, for example, we've now finished this metallurgy program. There's really we're in a strong position to start advancing process plant design and engineering at the PFS level. But this summer, we're going to be doing some additional drilling in the resource area. So we will see minor changes as the block model evolves with the benefit of that extra drilling. And I briefly alluded to an acquisition we made in December of last year for some mineral tenure that will underlie some of the infrastructure area of the project. So we expect to do some geotechnical work in that area this summer. So we want to see some of the results of that work and just sort of see some important kind of de-risking factors come out of that before we put out, sort of official guidance on the timelines for the PFS. But we're going to be parallel pathing a lot of the work as all that goes. So I hope and I think we expect to put out some of that guidance in the early fall, and I think are on track and in a very good position to meet that rough timing I mentioned of, toward the end of this year for completion of the PFS.
All right, so a lot going on with the company. Further de-risking, a summer field season. There's going to be a lot of news on tap from SURG Copper. So for those listening in, definitely click on the link below down in the show notes. It'll take you over to the SURG Copper website, straight to their news section where you can follow along with those updates as they hit the market. Leif, keep us posted. We'll get you back on for an update soon. And as always, looking forward to our next conversation.
Likewise, thanks so much for having me on. It's always great to chat, Chad.